This is Will, today's moderator. So, welcome to our all panels. Today, we will explore some of the most important themes shaping crypto. First of all, liquidity and DeFi innovation. Second of all, CeFi DeFi bridge. And third, the rise of the BTC-Fi infrastructure. And we have amazing speakers, panelists, Tika from the KuCoin, Wilson from Honeypot Finance, Chris from the Scallop, and please meet Hannah from the Turk Player, and Kenny from the Manta Network. So let's dive in. The first agenda is liquidity and innovation DeFi. So I'd like to ask Wilson. So what problem of either TVL and fragment liquidity is Honeypot solving that other can't?
Yeah, so idle TVA is one of the long problem for the DeFi. So for DeFi, it's all based on the order book model. Rather, it's actually based on the ANM model. So they need a liquidity to be deployed on the DEX. But if no one is actually trading the token, then it's actually no APY generated. So for this, we have the solution to build the two specialized the plugin. The first plugin is the swap incentivization plugin, where we directly incentivize the users or trading the token. For example, if the user trade the ETH and the WBTC LP pair, so they will actually be recorded how much they traded, and according to how much they traded, what's the volume to be traded, we have the protocol fee to be distributed directly to the user. And when the trading volume increase, we also built the dynamic fee plugin where we incentivize the LP. So there's two flywheel model that drives the APY for the idle TVL and solve the problem. And secondly, so when the LP receive the trading fees, instead of actually they're being unused, we reinvest to the different lending protocol to further increase the yields. So that's kind of the solution that we brought to solve the idle TVL problem.
Oh, nice. We have another DeFi and lending protocol, Scalo. Chris, please tell me what sets Scalo lending apart from other lending protocol?
Yes, thank you, Will. So yeah, I'm Chris. I'm the founder and CEO of Scala, and we are building a next generation money market called Sui, based on Sui. So we started from lending and borrowing, but yeah, we not only have lending and borrowing, we also have a swap aggregator, lending derivative, SDK, flash loan. And for lending and borrowing protocol itself, Scala has the unique model in overall DeFi industry. The model is inspired from Compound V3 plus Solent V2 plus the Sui moves its own unique technical design. For example, we can separate the lending assets and collateral assets, which means your lending assets will mainly focus on lending. It cannot be the collateral, and the collateral assets will not be borrowed out from other people, which means the protocol side, we will always have enough liquidity for the upcoming potential liquidation. So make our risk management of the protocol is extremely high in the industry. And for the lending parts, because it's mainly focusing on lending, it's similar with the bonds because it doesn't mix the different risks between a collateral. So we can have the strong lending derivative. We call it Scala market coins, S coins. And yeah, after you lending like USDC on Scala, you will got a SUSDC. And then this can even be used again in other DeFi protocol. For example, Bucket protocol is a CDB protocol on Sui. You can use it as a collateral again. So yeah, it can maximize the capital efficiency for the institutional users or who's willing to take a higher risk but have a different higher yield. Yeah, and beside the lending and borrowing model itself, we also have a VE model. It's similar with like Pendo model, but again, we built on Sui Move powered by Sui. It's all started from scratch. It's not a fork at all. And then we already lock like 40% of the security supply. All lock comes from the community. And after you lock our token, you can boost your borrowing yield from 2 times to 4 times. Also got a referral, borrowing fee discounts, borrowing fee share. And also we do have a loyalty program. with different milestone of our revenue, we will buy back our tokens and give to our VESCA holder. So it's like a subscription or like some VIP membership system on our lending and borrowing protocol. Makes if you are like a lending and borrowing the Nexi or a company users or like big family office, you can maximize your capital efficiency, but with the highest security level powered by SWI and the best risk management as well. Yeah.
Okay. Okay. Oh, now I'm really curious to hear from the Manta networks. Those. So Kenny, how does Manta think about sustainable yet attractive incentive for users and institutions as adoption grows?
Yeah, so hi everyone. I'm Kenny, co-founder over here at Manta Network, and we are a general purpose L2, but recently we've been hyper focused on thinking about DeFi and yield specifically for institutional level funds, because these are people, these are companies, businesses who are coming from the traditional world of finance, and they're entering a world where they don't understand, how you can use one token to, extract value from another token and do this whole sort of DeFi loop that all these degens focus on, right? Like what they understand in their world is traditional financial tools. And so the question for us is, how do you translate some of these traditional financial tools, things as boring as index funds, for example, and then bring them on chain, but then be able to exploit the on-chain mechanics for index funds to provide yield that is probably 10 to 20x that of a traditional index fund. That's entirely possible. That's stuff that we're already working on at Manta and will be released in the next 2-3 months. But we think that these types of tools, which are very familiar with institutions, that institutions are comfortable with, are now able to gain exposure in the Web3 manner and start taking advantage of that decentralization process to fully exploit the yield benefits on chain that you can't find in a traditional financial realm. And so I think there's a lot of these use cases where you can just look in the traditional financial world and say, okay, there are certain stopgaps or bottlenecks in terms of how the yield is generated for the S&P 500, for example, that can be completely facilitated and lubricated for the crypto space. And that presents a lot of financial opportunity. And I think there's a lot of that sort of opportunity to unlock built with DeFi.
Thank you, Kenny. Okay, let's zoom out to the bigger picture. As a VC and investor, I'd like to know the regulation and how CeFi and DeFi can work together. Let's move on to Agenda 2. Exchange and DeFi projects play different, but complementary roles in bridging traditional finance and crypto. So I'd like to ask Tika, how's the KuCoin adapting to the evolving regulatory landscape in the cryptocurrency industry?
Okay. Thanks, Will. So my name is Tika. So I am director and the head of global BD for institutional sales in KuCoin here. Actually, that's a very good question because when we're talking about this bull market, so the panel topic is bull market survivors, right? So the past 2 years time, we are seeing the bull market running. Actually, everyone knows that and then we got Chris and Kenny also just mentioned about institutions, players are playing a very huge role here. And with more, but why is it happening? Why are institutions now coming into the market to enter into the crypto world? But one thing that is we are seeing the observation is about the regulatory changes. So we are seeing more governments, regulators, they are trying to adopt crypto. 5 years ago, they're still thinking crypto is so scammy and they do not know what is crypto. But nowadays we are seeing a lot of sovereign funds, pension funds, insurance, large asset management. They are tapping into the field. So the reason why is that we are now having a better regulatory framework, and which centralized exchange like KuCoin. So we are actually the gate to we are at the front desk to have this kind of institution tapping into the market. So what have been KuCoin doing is that we have been trying to we have regular like updates and talks with all the regulators in different jurisdictions. So KuCoin is now like serving like more than 200 countries and regions. We're serving like over like 41 million users all over the world. Apparently we are one of the top 5 exchanges. And in terms of regulatory changes, because like we cannot predict, right? So and we what we have to do is only maintain a constant update discussion with the regulators. And so far, we are also trying very hard to obtain all kind of different licenses. So as of now, we are already licensed in FIU India, and then we are also obtaining the license in Australia, Turkey. Recently updated is that we got a license exchange in Thailand, and we also applied for the MiCA license in Austria in Europe. So which is also kind of one of the biggest move of KuCoin. So we are predicting like hopefully we will be getting the licenses, and so we can offer the very compliant trust services to all the users over the world, especially for institutional players.
Thank you, Tika. So now I'd like to hear another thought from the project. So back to Kenny. It's gonna be difficult question. Looking ahead 5 to 10 years, what will the relationship between CeFi and DeFi looks like, and what role will projects like Manta play?
Yeah. So what does the financial world look like in 5 to 10 years, especially with this incumbency with DeFi? I think it's a very important question to ask because I think it sets the stage for a lot of how we should be thinking as Web3 projects. I believe that within the next 2 to 5 years, the traditional financial system, thinking about structures like banking, is going to be completely different. Because one very simple example I like to give is right now, there's a lot of yield opportunity on chain, right? Whether you're lending through Scallop or whether you're doing something else. But you can't capture any of that yield opportunity if you're in a bank, right? If you put your money into a savings account, sure, you get 2% to 4%. That goes in par with inflation at best, right? But then when you take that same money and you put it into DeFi, 10% is extremely achievable. And so I think that right now, banks still don't recognize this. And so and users and customers don't recognize this. So they're able to exploit that ignorance in order to continue to build the same business model they always have, which is taking money from users and using that money to make a bunch of money and giving a little bit back to the users. DeFi is completely opposite because that entire workflow is controlled by us, you, right? The user. It's fully self-custody. And so if you don't like the rates that you're getting, you're able to move somewhere else, right? And there is going to be a better competitor out there that gives you better rates. That's not like a bank. I can't just take my money out of bank and move it to another one in the next hour or so, right? There's a lot of different frictions that come with that. And so I think in 2 to 5 years, once the DeFi space continues to evolve and continues to penetrate institution, more and more people are going to become aware of the advantages of on-chain activity, DeFi activity. And as a result, right, the question now becomes, do I want to put my money in a bank for 2% yield? Or do I want to have full control over it and get 10 to 15% yield on chain? And I think that dynamic is going to threaten the existing structure of a lot of institutions with, banks as the prime example, because we can all relate to that. And so, what does that look like 5 to 10 years from now? I think it completely changes how we think about banks, right? Like we think about them as places where we just basically put our money, swipe our debit card, et cetera, et cetera. But that's not entirely necessary anymore. And we're in the early stages of proving that right now with DeFi, right? Like the DeFi credit card experimentation, everyone's issuing their own like crypto cards and all that stuff, right? It's fun, it's sandboxy, but I think in 5 to 10 years, it's going to be very serious. And then that's going to force traditional financial institutions to think about how do they play in this new market or how do they die?
Totally agree. Yeah. Thank you, Kenny. And so we have another project, Scallop. So Chris, I believe everybody care about the security. So security is critical in lending protocol. We have some stories and other issues before. So how does Scallop approach safety and risk management for users?
Yes, thank you for asking this. I would say it's the most important questions for overall DeFi protocols. Yeah. First of all, a Scallop team's background is about cybersecurity. Yeah. I'm a white hat hacker, and then I bring my team to go to the Sui Move Build a House CTF challenge to join the security competition. We win the third place and the fifth place during our CTF journey. Yeah, and then for the protocol itself, I see several angles, key points. First, about transparency. Yeah, you need to be open source because it's the strongest power for the community. All check your TVL as a bounty. Yeah, for sure. And then you need a bug bounty for when you open source. And then I would say auditing help a lot, but you cannot rely on auditing. For example, Scalab do we done 4 auditing, and then I would say different audit firms have their different strong skill. For example, somebody might good at Sui Move smart contract auditing. Somebody might very good at financial logic attack, and somebody might very good at a memory buffer overflow. So different audit firms have different strong parts. You should collect with that. If you dive in deep in the ecosystem, you will know who is good at which track, and then you can get them to cover your weakness. Yeah, and others, I think one of the important keyword is formal verification. This thing is group of people use some math or programming math test to your smart contract to prove your logic and every status of your smart contract when you trigger a transaction. Every status till the memory level is correct, and then it might be done by many PhD or computer science PhD staff. Not many people can do it. For example, on Sui Move, there's only less than 2 companies can do a professional formal verification for smart contract, and then we are going to complete it in this week. Yeah. So yeah, open source, bug bounty, auditing, formal verification. I think these are the keywords. And then make sure, for DeFi smart contract, lending protocols, sometimes we need to get data out of the blockchain. I mean, Oracle. Yeah. So for the Oracle, you need to pick a secure one, best one. We pick a piece. They are the best on they are the best non-EVM ecosystem. And then we use them, and then our design is a zero trust system. We not allowed the protocol to input any price feed from us. We only use the third-party price feed. We abandon the control about just control the price. So yeah, I think this is all I want to share. And then I think education is also very important because nowadays we also saw some supply chain attack from front end. Yeah, it's not about smart contract. They just hack one NPM package and then steal your users' money. That is also very important. So education for overall the security for your team, for your community. Also avoid social engineering, this kind of low level skills. So yeah, these are my answers. Yeah.
Thank you. I can feel your passion on the DeFi. So now let's turn to one of the most exciting narrative, Bitcoin and BTC-Fi infrastructure. So BTC-Fi is becoming one of the fastest growing area of the industry. So I'd like to ask recent, how can community and DAOs use Honeypot to bootstrap their own token liquidity in this context?
So there are major problem that we see right now is actually the token is not actually being well used for the protocols. So most of the protocols that we see nowadays, they try to actually be the supply side of the incentivization model. For example, Sushi Swap, they will actually provide the Sushi token to actually just go directly to incentivize the ALP. And also there are the VE model to actually incentivize the supply side of the story as well. So, I mean, those are actually the thing that we see today is very limited. So, we are trying to rewrite a story with actually behavior-driven incentivization model. So for anything that a user do, for example, when they're actually doing the swap, so we record what's the volume and what's the number of swap that they did, and we actually use this integrated to the Bearer proof of liquidity to incentivize the users through the DAO mechanism. So not only the supply side will actually be incentivized, but also the demand, the real user side will actually also be incentivized. That's kind of like the main side that how we build the decentralized finance product, and also how the logic that we build for the other product as well. We also build the meme launchpad where we directly will actually allocate a part of the LP token to the token deployer. So, and we also based on the number of the transaction, how users actually engage in the token launch stage, and like the trading activity to decide what else can be distributed after that. So, try to actually be pretty fair for all the user who is actually participating the on-chain activity from the honeypot.
Thank you, Wilson. Hey, Hannah, it's over for. So, where do you see the BTC-Fi ecosystem heading over the next 1 to 2 years, and what key factors will drive its growth?
Okay, so this is Hannah from TechLayer, and here for support our eco project called Barra BTC. So what we think about, actually we are always focusing on try to bring more Bitcoin to on-chain, but I think other like guests already talk about how the institution to play the role in this cycle. But for us, we're more focusing on how to bring more individual people and community to be able to play on chain and also be able to owning some of the Bitcoin. Because it's not like all those miner and also institution and the big wheel holding the Bitcoin. So a lot of people thinking the Bitcoin game, the Bitcoin fine is more for the big player. But what we already try to participate is we just closed our 10,000 node sale. And at that time, there were more than 3,000 people participate on our node sale, and they are all individual and try to use their native Bitcoin to make their own red Bitcoin. So I think that's really a good sign. I think in the future, especially maybe after the 1 or 2 year, after all those institutions, they start to maybe rotate their money to other space, or those like the people, the individual people and community people will be the real user for the Bitcoin Fi. And also I think that's the whole idea why blockchain is important and try to grow their own community, but not only server for the institution. Okay, so that's my input. Thank you.